It is 1400 hours here in Central African time. Thank you so much for tuning in to Market View today. On our program today, we want to look at the winds of economic change that are blowing fast through the Kingdom of Eswatini, and we are tracking every gust. On our first agenda, a bold new runway, not just for planes but for produce. Agriculture Minister Mandla Chauka is planting a vision to turn the King Mswati III International Airport into an agri-export powerhouse. Will the dream of Eswatini grown goods flying to global markets take off? That is a big question, and we will understand through listening to the Minister for Agriculture, Mandla Chauka. And then the numbers do not lie. Finance Minister Neil Reichenberg is making a hard sell. He's talking about low debt, shrinking deficits, and no IMF strings attached. Is Eswatini one of Africa's best-kept investment secrets? We'll listen in. And finally, economist Sunny Lesbia joins us to decode the market temperature of the day. Growth revised, inflation moving, currencies shifting. What does it all mean for your bottom line? Fasten your seatbelt. Market View is ready to take off, and it starts now. On our first story, the Minister for Agriculture, Honorable Mandla Chauka, has announced a bold vision to boost agricultural exports through a distributing center at the King Mswati III International Airport. If all goes according to plan in the ongoing engagements with the stakeholders, the project will include a cargo runway that is designed to streamline export operations and open new markets for new produce. The minister shared this strategic plan during the inaugural Eswatini Investment Conference that was held at Shama House at Eswatini, emphasizing stakeholder collaboration in driving economic growth.
The most important thing that we need to do is to develop our agro-processing such that we are able to then secure a permanent market for the farmer. That also creates a pull factor whereby the farmer knows that there is a market and there is a certain price that he's going to get. And therefore, he has got the energy to wake up and go and farm because he knows where his produce is going. So agro-processing is one of the most important sectors that we need to develop as quickly as possible. I always use the model of the sugar industry. It's one of the sectors that has already been able to do or to make a lot of progress in that area because the sugarcane farmer doesn't worry where his produce is going. He just harvests his crop. He knows that he's going to put it in a truck. It crosses the weighbridge. He can even calculate how much money he's going to get because the price is already known. We need to replicate that across all the value chains and all the agricultural produce, crops, animal produce and everything so that the farmer doesn't have to carry a basket on his head trying to sell his produce or put something on his truck to be, on a buggy moving around. So agro-processing is one area. The other area is then being able to develop infrastructure such that the produce can move around. Firstly, move around in the country. Secondly, move around into our export markets. And that is why we are currently engaging on developing our airport such that we've got a distribution center and we're going to have a cargo runway so that we are able to take our produce because our produce, because of its quality, is demanded or wanted across the globe. And we do have these markets, but we need to get access or get to them by making sure that we've got the infrastructure in the country such that we are able to then do. But lastly, I do want to state that we also want to have food sovereignty or food for ourselves. Yeah. Because when we import some of the produce just to feed ourselves, then we are exporting jobs. We are not getting the jobs that should be given to our people in this country.
Over 7.2 million tons of minerals pass through Eswatini annually from northern South Africa, a sign of massive logistical potential. Now, the Chief Executive Officer of Eswatini Railways, Nixon Dlamini, highlighted that the investment conference, inviting investors to tap into Eswatini's growing role as a regional trade hub.
The Eswatini Railways, even though we are a landlocked country and our network is only 301 kilometers, but it plays a vital role in terms of facilitating trade within the region. Now, under the auspices of the Southern African Railways Association, which covers countries as far north as Tanzania, the DRC, Zambia, Zimbabwe, and so on. All this traffic that is generated within the region needs to reach the various ports. And it's mainly export traffic. Now, these ports could be Maputo, Richards Bay, or Durban. We don't go down as far south as Cape Town, maybe. But Eswatini is the main conduit because we are under we fall within the north-south corridor. So a consignment from Zambia goes through Eswatini in order to get to Richards Bay. So both inbound and outbound logistics, we play a vital role as a country. I mean, to give you, to put this in perspective, the minerals that come from the northern part of South Africa, this will be your magnetite and your rock phosphate. These go through Eswatini, and you're looking at about 6.5 million tons. Well, let's put it 7.2 million tons of traffic. That's per annum, and this is that's the impact, and that's I'd say this is why we're strategically an important railway.
Well, that marks our business news segment. Let's go for a break. We have our Enterprise Watch segment after the break.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back and thank you for staying with us. Honourable Minister Neil Reichenberg urges investors to prioritise Eswatini, a nation with the lowest debt to GDP ratio at 40% and a fiscal deficit slashed from 7% in 2018 to just 2 to 3% today. The message is clear: Eswatini is stable, disciplined and open for business. Let's listen to the Minister making his presentation during the Eswatini Investment Conference.
Our theme is Eswatini is open for business, which is a lovely theme for the day. And but at the same time, one can say, what are we doing about that? It's one thing saying it, it's one thing having a conference. What are we doing about it? And one of the biggest things I think that we've done, which doesn't necessarily be recognized or isn't fully understood, and that is that when one crafts a budget, the budget speaks to what are you taking serious in the country? What are you really putting forward? Is it the real pressures you have in the social front? Is it the wage bill? Is it whatever the case is? And in so doing, when as the budget team, we came to cabinet this last year to say we plan, in fact we were quite proud of the fact that we're going to be issuing we're only increasing recurrent expenditure with 10%, the wage bill about 10%, and the capital budget 10%, which often it's skewed. Often it's the capital budget that gets a lower budget and everything else gets a higher budget because of all the pressure you have as government on the needs out there. We actually had the Prime Minister lead on the discussion to say, guys, if we are saying we're growing, our main ambition is growing the economy, we have to have a higher capital budget in Eswatini. So where the budget landed was an 8.8% growth on recurrent side, and a 14.4%, I think it was, ultimately on the capital side. And I believe from a budget perspective, from a government perspective, there's not many things that speak louder than that actual implication of what we did there. At the same time, I think Faith was touching on, what's that balance between private sector and government sector-led? How do we get that right? I think you need to be clear. Government needs to lead when it comes to giving the direction, putting the initial investments in place, setting the environment for where the country is going to from a business perspective. It's the private sector, that's the engine. It's the private sector that's going to give us that growth. But as a government, we are trying our best to try and get out of the way of possibly of business, making sure we're not interfering in business, but at the same time trying our best. At the moment, there's a lot of things we need to do, and we're still in that growth phase, but doing what we can to set the stage for businesses to thrive. What do we need for businesses to thrive in the country? What does a business need to really be able to do well? First of all, it needs a stable political system. In Eswatini, we've got a wonderful government system called the Tinkundla system. And at the moment, sometimes people might even criticize it to say, well, it seems undemocratic. And I'll say to them, come spend one day with me in Parliament and tell me again, Eswatini is undemocratic. Eswatini is a highly democratic country. Yes, our system is not what people understand in a multi-party democracy, but at the same time, it's got a very, very good stabilizing political system that really is great for businesses to thrive because you know what you have today and you know what you're going to have in 20 years' time. It's got a very good tax regime. So for business to thrive, you need a good tax regime. As a country, we reduced the tax rate, the normal company tax rate, from 27.5% to 25%. And I don't think there's a stronger message that government can send to the private sector and to businesses to say, we're open for business, we respect you, we are expecting you to grow. And that growth will ultimately lead to better jobs, and poverty alleviation is what we really wake up for every day as government. So we really believe that we have the environment right for, on the tax front, people to do well. What we also have is we have developmental approval orders. If companies are coming in wanting to invest in the country, they can apply for developmental approval order, 10% tax rate, all sorts of other initiatives. We also have SEZs in the country where if you invest in 0% tax, and at the same time, even major corporates are wanting to come in. We're even open to have discussions with them to see what can we do to make your life easier from a tax perspective. We clearly understand company tax is not the biggest tax. What we wake up for every day is to grow the economy and to get people employed. And when people get employed, people come out of poverty. When people get employed, the tax that we get from PAYE, which is a whole lot higher than the tax we get from company tax, continues to increase. So hence the real focus is around that and not actually trying to get company tax out of companies. Sustainability is critical for companies to thrive. When I became, at the moment, we take sustainability of our economy extremely serious in Eswatini, and I think we're one of the few countries that actually are on a sustainable path. We had at the moment, what you look at is you look at your fiscal deficit. So at the moment, we have a fiscal deficit we had on of 7.5% in Eswatini in 2018, meaning that the gap compared to GDP, between expenditure and revenue is 7.5%, meaning you are on an unsustainable path, meaning at some point, you're going to get to a point where you're not going to be able to pay your debt, you run out of forex, and you just decimate the companies in the country. So to be on a sustainable path, it's pointless building something sustainable when it comes to economies and businesses in the country when you're building it on an unsustainable government. And so in Eswatini, we've managed to get our government and our fiscal into a sustainable position. What that meant was we took the 7.5% down to 2% fiscal deficit. And if anyone thinks that's something easy to do, it is not. It is an extremely difficult thing to do as a company. And again, it was a country initiative. So if I'm standing here, please don't. If you're clapping hands for me, it's for sure not me. It's very much a holistic approach. But to get that right was very, very difficult. But now we believe that our economy is on a sustainable path. Businesses can come in knowing that if you invest today, In 20 years' time, you're going to be able to get your investment out the country. The country's not going to run out of forex, or it's not going to be trying to somehow grab assets or do what they need to do. When the country's on a sustainable path, it means that companies can relax in the sense that what you're doing now, it'll still be healthy in a long period of time. Our debt to GDP, we're one of the lowest in the region, around 40% debt to GDP. Meaning, and not only is our debt to GDP low, but we're also on a sustainable path, meaning we're remaining in that kind of space. Not to say it doesn't bump up or bump down when certain external shocks take place, or sometimes just things you aren't in control of happen, but that is what we aim for. That's where we try and remain as a country. We're trying, at the moment, our debt to the IMF, for instance, we'll have zero debt to the IMF at the end of the year. At the moment, I think we're the second lowest on the continent, our debt to IMF, meaning that if there is a shock, the IMF there is what you call lender of last resort. They give you money very quickly if there's any kind of shock. Meaning that if there's any kind of shock, that we have someone we can tap onto and that's ready and that's available to assist the country in case we need it. Our reserves we continue to focus on. Obviously with the economic growth we're having now, even now and again we do go below the 3%, but we aim at the 3% of import cover and we remain in very healthy space on a reserves point. At the same time, what we try and look for, companies need stable workforce. As we believe in Eswatini, unfortunately for us, we have a very high unemployment rate. But, and like I say, that's really the reason why we're doing everything we're doing all the time, is really to make sure we get that employment up. But we do believe that we have a wonderful workforce in Eswatini, and really we're opening up. At the moment, there's presentation in the cabinet about an e-visa system, e-permit system, fixing our work permit regimes. A lot of work being done there to make sure that is corrected where it is possibly not right at the moment. We got very ambitious growth targets in Eswatini. And so what we are doing is, I think the Prime Minister touched on it yesterday, at the moment, we are needing a whole lot more money for our ambitious growth rates than what we currently have in the budget. So the government is absolutely open to be able to work on PPPs, to work on possible boot arrangements, to work on securitization of assets. I mean, even if, we're talking this morning, the railways. If the CEO of railways comes and said, Minister, can we please securitize our railways so that we can raise money, so that we can build more railways? Absolutely, we're open to all these things. Our targets are reflective of the fact that we are open because we have to be open. To get our current growth rates that we need, we have to be open to innovative ways of financing that, so that everybody here understands that if there's ways that one can say, right, if this parastatal can do something, can this parastatal get a sovereign guarantee from government to be able to do what they need to do? We're absolutely open to be able to make sure that we find ways to do that. At the moment, even though we plan to increase our capital budget with about R1 billion a year in the near future, we know that that's not sufficient to give us the growth drivers we need. So hence, when it comes to PPPs, boot arrangements, and any other way of trying to get this open, we definitely are hoping that we'll be able to work closely with you. One thing that we are well known for in Eswatini is our accessibility. So if you need to see ministers, often it's really not that difficult to see ministers. Accessibility to whoever you need to try and get to is there. So if one has an innovative way, our doors are absolutely open. At the same time, one of the things companies need is peace in the country. We do believe as a country, we are out there and leading. We have a very peaceful country, and peace and stability is one of our large strengths. Opportunities. Where are the opportunities in Eswatini? I do believe we'll still have a few presentations. Lovely opportunities in mining. The Minister will speak on that. Minister of Agriculture touched on agro-processing and agriculture, and just from a budget perspective, we are putting a huge money into the agriculture space. Lovely projects like the Mkondo Ngwavuma project, where there's 30,000 hectares of land opening up under irrigation in the Lavomisa area, where the poorest of the poor people live. At the same time, it's got the most fertile soils in the country. So just opportunities coming up like this, we really believe is going to be phenomenal, not only for agriculture, but the agro-processing, very much like the Minister touched on. Financial sector growth, we believe that there's a lot of opportunities for continued growth in the financial sector. Manufacturing, at the moment as a country, we are subscribed to SACU, we subscribe to SADC, we subscribe to COMESA. At the same time, AFCFTA is coming, we subscribe to that obviously too, but we are probably one of the countries with the broadest how can I say, trade regimes when it comes to all of these relationships that we have. And we believe that this should really set the stage. So whatever one wants to do, one can have access to whichever markets one decides to supply to. At the moment, value addition, we need to try and continue to see what we can do on the value addition front. As an economy, we have a large sugar industry. Generally, we produce sugar, even packaged sugar, but it kind of ends there. We need to look at value adding our sugar. So please, investors, if there's opportunities there, really believe that we need to try and enter that space. Forestry, we grow trees in Eswatini very professionally, very economically. We produce planks in certain area, but generally there's not much value adding of the planks, nor timber value-added products. So whatever opportunities in that space, the country is open to those. We do believe that even our textile industry, large textile industry, we plan to vertically integrate downwards in the industry. So whatever we can do to be able to have materials coming through the system so that we can produce the textiles in Eswatini is really we're saying let's leverage off our strengths. We have these strengths as a country. What can we do to leverage off those and improve on those? We're not saying we don't have challenges in our country, but what challenges we have, we believe if one looks at our portfolio, one will notice there's a lot of work being done in those challenges. So my last closing remarks is just to appeal to the business environment and to the investors, is to say at the moment as a country, our red hot reason for what we are doing is to create jobs mainly for our youth. So whatever we are planning here today, even if it is just on the revenue generation front, you'll understand as a government, our focus will be there and really appeal to everyone to remain, to support us as a government to get this right for ourselves and for the greater good.
From the investment conference to now looking at the investor confidence, whether you should have that in our market analysis with Sanele Sibia. Welcome back. This is our market analysis. As we cap off the show, let us look at the market movements today with Sanele Sibia. Sanele, good afternoon to you. Welcome to the program. Global markets are moving. We're seeing currencies sleeping and commodities twitching today. Perhaps let's start with the U.S. markets. The Nasdaq leading the gains while the Dow is taking a dip here. What is this divergence signaling? I'm wondering if what is happening with the tech sector is really what is, really signaling these numbers today.
Hi, Mr. Ngumalo, thank you. So what we are seeing there again is a bit of that divergence, a bit of that pattern that's happening in there. And you do know that the tech sector is actually at it's actually at the core of these talks that we expect to happen between the US and China, purely because we do, China needs those tech or those AI chips to actually invest into their own artificial intelligence landscape, while the US had actually put those a bit under scrutiny. So we know that it's going to be a bit of one of those sticking points where we do eventually have to get back to making a deal. But overall, what the markets are really just working on right now, Mr. Ngumalo, is there's that overall positivity that shows that markets are somehow appreciative of the fact that we are somehow back to a semblance of normalcy in terms of the overall landscape there.
It's interesting, as we have the numbers put up on our screens. We have the S&P 500 on the green, the Nasdaq on the green, but these gains they're not marginal. They are marginal. They're not really significant. Perhaps the Nasdaq doing a little better, but the Dow Jones clearly on the red there. But I do want us to move on to the European markets. And with your help, because I am realizing that the gains here today are modest, so to speak. And I wonder what is behind this subdued investor sentiment there?
So it goes back to, right now, what we are seeing across markets, Mr. Ngumalo, is it's more of a technical trade. The fundamentals still haven't gotten back to where you'd want them to be. There's still that uncertainty that exists regarding whether we are going to have whether we're going to have tariffs or not. There is still that uncertainty. It's still there. But what we are seeing, which is quite interesting, if you look back at the numbers now and look at the numbers, say around April 2, you will realize that we are now back at the level where we started off. So now those 10 trillions that were lost during that time, they have actually somehow been regained into the markets. So that's what we're seeing markets trying to do right now, technically playing their way out. But when I look into Europe specifically, it's an issue of the fact that we do know that there isn't a deal yet between Europe and the US, and we've seen the US do something. President Trump is doing something he's never done before. He's out there being advocate for business. He's signed a 4 trillion deals to the tune of 4 trillion for the US economy. So now, in as much as that's good for the economy, but it does signal that Trump is going to do anything and anything to make sure that business goes back to the US, and that now somehow leaves the threat of tariffs always lingering on markets, and also brings in another dynamic of what type of a deal are we going to look what type of a deal should we look forward to, given the fact that we can see the other movements on the ground. We've seen the deal that was made with the UK, somehow to the detriment of China. So there's still a bit of that jittery across the globe, Mr. Nxumalo.
Not necessarily impressed by what Trump is doing, much as it is impressive. I want to submit that he's just making his own bed that he had just ruined. But let us, move on to the Asian markets. I do realize the Nikkei and the Hang Seng are taking significant hits. What is the reflection here? Is it a slowing economic momentum in Asia or external shocks in the U.S. inflation?
It's an issue of, again, technical trading, Mr. Nxumalo. The fundamentals, no one knows what the fundamentals are going to be tomorrow. No one knows, because right now it seems Trump controls the fundamentals. So what markets are trying to do now is just being a bit cautious, making sure you're staying at those levels at which it works for you. But then at the same time, we do know there is that issue around the tech stocks, that DeepSeek story, and we do know there is an agreement that has to be made along those lines. So that's why we're seeing those much losses in terms of the Hang Seng, for example. We know that it's a tech-heavy stock, and then as well with that Japanese stocks, we do know that there are those auto tariffs that came in as well just a couple of days ago. So that's what markets are just trying to play around with within that Asian landscape, Mr. Nxumalo.
If you can quickly just brush through our commodities and currencies in this little time remaining.
Thank you, Nxumalo. So again, South Africa as well is also just playing out and watching to see. We've seen the Johannesburg Stock Exchange losing some 500 points there. Eswatini Stock Exchange, there hasn't been much of a movement. When you go into the commodities, you will realize that with the resurgence of normalization of trade, and the likelihood of, we've heard President Trump talk of the likelihood of striking a deal with Iran, that nuclear deal with Iran as soon as possible. And it seems that indications are that deal is about to get on the table right now. So we're seeing both gold and Brent crude oil climbing down on those sentiments. And then when you come into currencies, when you look into the dollar exchange rate, you will see that we've made a bit of a gain against the dollar. But what's more comforting on that front, Mr. Nxumalo, is we've had the Treasury come up, the Feds come out to say that they're not choosing the dollar as a bargaining chip in this trade war. So now that somehow stabilized the dollar a bit, but we are still waiting for Jay Powell to speak later on in the day, and now that's going to give us a bit of more of an inclination or an indication of where things are going in terms of the dollar Lilangeni exchange rate. And then in terms of the euro Lilangeni exchange rate, we still remain at that 20.25 region. Again, we are waiting to see what kind of a deal will come out between the European Union and the United States. And again, against the Japanese yen, we're seeing against some strengthening against the yen as well, purely because what we spoke of, the changes, the movements in those indices, and the new import stocks that are those tariffs on the automakers into the US. Thank you.
Right on time. Sanele, thank you so much for your time, and thank you to our viewers as well for staying with us here on this episode of Market View. We hope that you'll join us again next week, and do enjoy your weekend. This has been the end of our program. Bye-bye.